The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. And we will be talking just a few minutes here about the German DAX. What I would like for you to take a look at is you'll see when the German DAX opened this morning down, that's what caused our market to fall to the downside. That happened around 1 o'clock in the morning, New York time, as you can see, and the Dow dropped. We're going to go into the Dow in just a little bit because that's the big daddy rabbit that's been running this whole thing. 110 points of that move yesterday was due to IBM, and we're going to cover that also just to try to make sense of what the heck is going on. Yes, Mike, I am watching the VIX, but I'm extremely bullish the VIX, as most of you know, and I've been long that since 983, and I'm looking to get out of it around 50. Anyway, let's take a look at some of these markets here this morning, folks. This is a Friday in an up week, and I know this is the big anniversary date, but for the market to close sharply lower this week, this today would be very, very surprising. Not so much the Dow, because the Dow was influenced by IBM so much, and we will cover that in just a minute. But let's just see where we are last night. This is you'll notice here we were not this. Oh shucks, you know what? This is a Thursday. Man, I'm having trouble with these days of the week. How does that work? It's Monday, Tuesday, Wednesday, Thursday, Friday. Okay. Yep, this is the anniversary of Black Monday for sure. Let's take a look here at the Dow Jones. You'll notice last night the Dow Jones was holding its own till London opened, the DAX, and then the market broke, and look where it stopped. It stopped exactly at the 61% retracement of the overnight low on Monday the 16th. Spot on. That's exactly what it did. Now, what would we expect after that, boys and girls? Are we going to have a little test today? Come on, humor the old man. Okay, let's take a look here what's happened. Here's what's going on with the Dow Jones since that low was made. We'll just bring this up and just give us an idea of what we could possibly be looking at today. Let's just look at this here. Hold on just a second. Okay, now you'll notice here we came down. The low there at 22,955 was this is the Dow Jones E-mini, of course, was the exact 61% retracement of the low from Monday morning, the 16th. That was Sunday night for you folks. Now you'll notice that we have a potential for the market to rally about 70 points. That would still be down on the day, about 50 points. But watch the level of 23,085 in the Dow Jones futures. Just keep an eye on that because it might be very, very interesting to take a look at that at that point. Now, the second alternative is that the market just gives up and it doesn't really do very much, which would be a big surprise. I mean, you'd have to call this the biggest correction in the bull market that we've had. That's a joke, folks. We've been up for, I think, 13 out of 7. Wow, 13 out of 16 days. That's not 4. Wow, let me write this down. 4 out of 17. I think I'm gonna punt on this show. 3 out of 17 days have only been down. I had it written down. I just wrote it wrong. Let's take a look here at the Dow Jones. If in fact we don't get a rally, and then we'll see here, what we're looking at. Then we'd be looking at the Dow to get down around 22,900. That would be down another 100 points in the Dow. That would put the Dow down. Down, let me see, down about 250 on the day. So the key here is if we close really badly today, then that would be a sign that, yes, something happened. Now, I do want to give some kudos here to somebody that deserves them. And let's just put this chart here of the DAX because this describes everything. Just as the London traders came in this morning in London, guess what they were doing? They were playing the replay of TFNN with Norm Winsky on, saying that the market had a very strong probability of going down on the 18th or 19th. And sure enough, look what happened. So anybody that's long, you have to blame your losses on Norm Winsky. And those of you who were short, send him some nice gifts. His phone number is 555-555-5555. You'll be able to reach him there. Okay, enough of the joking, folks. Let's take a look at some of these markets as we're going through. The gold stopped pretty much where we hoped it would, around that 1278 level. 1280. We rallied up 14 bucks off the low to 1292. Haven't really done very much since that time, and then we'll see if if it's going to do anything from that point. But at least it held that level. Going below 1278 now would certainly set up a much lower level down around 1270, which is the 61% retracement of that move. We're going to have a very special guest at the break. It's my best friend, Byron Tucker. Byron was on the floor of the CME in the S&P pit the day of 30 years ago today. I was in California in Avila Beach, and Byron was coming out that following weekend. And it's going to be very interesting to listen to what he had to say, because we chatted a little bit about it yesterday, and some of the stories that he recalled to me were really quite funny. I'd heard them before, but after 30 years, you just can't remember everything. But boy, folks, 30 years ago, it was really bad, let me tell you. Those of you that would like a good review of what happened that day, go to Art Cashin's website. And he's got if you don't have that website, if you drop me an email, I'll forward you his daily commentary that we get from one of our friends over in the UK, and you can read it step by step of what happened from late Sunday night to the rest of the day. It really gives a step-by-step blow of what really happened, and some of the people that actually went tapioca that day. And believe me, there were a whole lot of them. So anyway, we don't want to see a day like that again, no matter what. We will, but unfortunately, it might not be in our lifetime. We'll have to wait and see what really happens, from that level. Let's take a look at Big Blue here, folks. This is what happened yesterday. This was the big move in the Dow. The Dow would have been down, probably about 30, 40 points, probably, if Big Blue hadn't taken the tune off. You'll notice that we were down there at that 61% retracement there at 140. And what I do is, I don't trade Big Blue, but I like to figure out what's going on with the stock just to see if there was some reason to think to be buying, Big Blue at that time. So let's just take a look here where we were way back coming in on election night, because this was when we were extremely bullish stocks. If you remember, here's what happened. We were down 55 days from the August high, and we all know that in 1929, 1987, the market bottomed exactly 55 days after the tops of those years, and that's what we were having right on election night, which happened to be a big surprise. You'll notice that the market, take a break, 877, we'll cover this when we get back, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, well, folks, we're back and we're looking at the chart of IBM on the day before the election. You'll notice that the market came down. I hope that's correct. Hold on just a second. If I did this wrong, I think it's time to head off into the sunset. Let's just wait and see what we got here. Yes, this is wrong, folks. What I wanted to show you here, the chart that I'm showing you here, which was the next chart, which is very similar to the 66% retracement that we had on IBM, close enough to 61. But this is the Dow Jones E-mini on the night of the election. You'll notice it had closed higher the day before, and then with the big surprise, the market broke down, and then it rallied all the way back to close higher, which was an incredibly bullish sign. And then, of course, then we went off to the races from 18,000 to 23,000. We're up 5,000 points in a year. We had a record of 51 new highs on the year. That has never happened in the history of trading, which this is history, what we're seeing right now. And we'll see how it all works out. But anyway, that's what we're watching. Let's look at some of these other markets that we happen to have some interest in. One of them, of course, that really follows along with the gold and everything is the euro. And we'll take a look here at this euro. You'll notice that the euro did hold that level of 117.45. We got as low as 117.30, and then it rallied, quite a bit of about $800. That's up around the 61% retracement. But frankly, I think we're going to form a big ABCD on this. It's going to take it up to test the 120 level one more time, if in fact it does that. So we'll see what's going on. Yes, this is the day the market lost 22% in one day. It was the largest single loss, 508 points. And it was really, something really spectacular, to take a look. I don't know if I can do this or not, but let me try. Oh, I better not get too cute here with the technical part of this, but I'll try one thing just to see if it'll work here. Hey, there you go. This that might be the. I will discuss the euro. Yes, I'll talk about the euro a little bit more. I don't know if that desktop thing that I put in there will work, but that's really the description from Art Cashin of what happened on 30 years ago. It's step by step. It's exactly what happened. If you want to look at that, that's right there in the file. You'll be able to see it, I hope. Somebody try to open it if you can. If you're not, just email me and I'll send the file, and then you should be able to get it. I don't know how it works in the HotCom, but that's neither here nor there. The euro is stopped right at the 61% retracement up here at 118.50, 118.45, 118.50. But if you'll notice, this has the potential to be a really nice ABCD pattern to the upside that would take us to the 120 and change level, which is still way below the 121 level. That would be nothing more than the 78% Gartley sell. This is I keep thinking today's Friday, folks, but I'm wrong. This is this is Thursday. What you do is you take Thursday, you add one day, and then you come up with Friday. That was the 3 years I was in the fourth grade. I had a really tough time with the days of the week. Anyway, just watch this euro. We had the same thing happening too. We talked about the Japanese yen yesterday because it had such a really nice pattern. Right when we were on the air, it was hitting this 113 and change level, and several of you folks emailed me and said you actually did that trade, which was good. And now it's come down and stopped right at the 61% retracement too. So this is going to be a real interesting day as we come out today. The opening is going to be very important here in the market because we're going to be opening lower, and folks, we're opening lower in a bull market. Let me ask a little test here, a little test question, okay? Just to change the theory a little bit. Let's ask a little thing. How many people think the shorts have been hurt over the last 30 years? Well, the last 6 or 7 weeks. How many think the shorts have had much fun at all? If the shorts have any fun at all? So what's going to happen if the market bounces just a little bit? It was already down 150, and now it's only down whatever. We'll see. Anyway, we'll just keep a look on that. That's what we're going to be watching. Anyway, that's my feeling on the euro. What we're watching there. Watch these rallies that we're going to get. This is going to be very, very interesting, to pay close attention to that. Also on that E-mini S&P that we did talk about yesterday a little bit as we were talking. You're probably right, Baba. You're probably right, Bob. Let's put this up here. This is the, you'll notice this is the E-mini S&P over the last 5 days. That's that same 3-drive pattern that we had in the NASDAQ. Now, the Dow Jones one was absolutely wacko. I mean, because of IBM, it shattered the 3-drive pattern, mainly only because of IBM being up over 100 points, which was the biggest part of that move. So that's why we're watching that. My chart disappeared. Well, let's try to get it back up here for everybody and see if we can get it. I hope it stays that way for a little bit, and we'll see if it does, and we'll see. You're absolutely right. Your Buffett was wrong. The biggest single trade was a short in natural gas in 2006. I happened to be in that trade. It was right at expiration. It was an accident. And I remember that. I'll say it's not showing properly. I don't know what else to do. Let me try one other thing, folks. Hold on and see if I can get this up here so we can see what we're supposed to be seeing. Just give me 1 second here, and then we'll be okay, I guess. Let me see if I can find it again. Boy, oh boy. Here we are. Let's get this up. Now we're going to try it one more time to show this 3-drive pattern here, and we'll see if this works. Let's hope this works. If it doesn't, then we have to go to game plan 6. Okay, let's see if this is seeing correctly now. If it doesn't show correctly, then it's time for me to hook up Walter to the old Warthtroft. Messed up since, you know what happened? I put that file in there to, that's probably what happened. I loaded that file that tells about Art Cashin's recount of the market in that time, so nothing else I can do about that now. What I'll do, folks, I'll log out of the room at the break, and then I'll come back in, and then I'll put the chart back up again. That's about the only thing that I can do. We're going to have Byron Tucker, my closest and dearest friend, is going to be on telling us about what it was like in the pit in 1987. Byron worked for Goldman Sachs. He ran their trading operation there. Before that, he was working personally with Leo Malamed, the president of the exchange, setting up the foreign currency pits, the S&P trading, all of that stuff was things that Byron had done. He's gone to he's from Knoxville, Tennessee, and he basically is from went to Amherst, and he has multiple degrees from Amherst and also for the University of Chicago. Very highly educated young man. And why we were friends, I still have no idea. His idea of sports is he has to go to the Google to find out who Mickey Mantle was. But anyway, he's certainly smart on everything else. So we'll have him on as we come up with the break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Is with us. We should have Byron Tucker on the line. Byron, are you there? Well, I guess God's not on our side today. Evidently, we're going to have to try to find him somewhere, but he was all scheduled to come on, but he's not, so we'll continue on here. I'm going to try something new, folks. I'm going to try a... oh, Byron, are you there? I don't hear him.
On the line.
Hey, there you go. We're okay. We got you. How are you, buddy?
Well, I'm good, Larry. I'm great, in fact. How are you today?
I'm pretty good. You mind going back into time about 30 years ago, this time of the day as you were on the floor of the Merc? Tell us what was happening in your life at that time, because you were right there on 160 Jackson Boulevard that day when everything was going crazy. I know you. We've shared the stories many times together, but tell the folks what really was happening that day, because they have no idea how scary it really was. So fire away.
Well, I'll give you a little background. When I left Goldman Sachs, I maintained my membership in the Merc and traded, but over time I developed a brokerage business, and I handled the business from the side of the pit. And I had a very large European client that was a very active trader. And so Friday was a down day, and their account got pressured because of margin. They didn't get a margin call. They were close, but there were a lot of margin calls. And Monday morning, the market's opening up lower. We know that. And there was something in those days called portfolio insurance, where the big firms, Goldman and Morgan Stanley and so forth, would offer institutional clients protection against a big downside move with a combination of options and futures. And as the market opened lower, these were triggered, which really exacerbated the decline. It opened crazy, and it got crazier. In my 20-plus years on the floor, I never saw anything like that ever close again. At one point, I had a problem with the trade, and I had to go into the pit, so I had to turn my badge over on my coat so nobody could see it, since I didn't want to get an out trade. But the absolute chaos and fear and emotion and craziness of the pit and the size of the pit, everybody and their uncle was there trying to protect themselves. And, of course, the public was there trying to see what they could do, and there was no electronic trading. It was all hand signals and paper order flows. But the amazing thing to me was there was always a bid and there was always an offer. Now, this was when ticks were $25 each. And the spread between the bid and the offer might be 200 points. But some group of guys in that pit were always willing to make a market. And that's what I think was amazing about the capacity of the futures exchanges when they existed on the floor. My client, I went underwater huge, and needless to say, it got my attention. It was an extraordinarily stressful time, and fear was rampant everywhere. You could actually feel it and smell it from all sides, including guys in the pit who really didn't know if any of their trades would clear, because trying to check a trade after you did it signaled across the pit with someone was impossible. So at the close, I got a call from the CEO of the firm, and he asked me to come to his office. And when I showed up, he said, "We need $1 million from your client." And I said, "Well, they're in Europe, and it's closed, and it takes 3 days to clear, but I've already asked them to send more money." And he said, "We need it now." He said, "You've got to write a check for $1 million." So I didn't have a choice, because I didn't want to blow them out. And I, for many reasons, it would have been a big mistake. And so I wrote a check. Fortunately, they never tried to cash it. Anyway, the next morning, we all got in early. As you know, it was just crazy. And, of course, I knew Leo Malamed from having cleared that firm and knew some of what was going on behind the scenes. And if the Mercantile Exchange as a group company, as a mutual exchange, hadn't gotten a humongous bank loan from one of the local Chicago banks, which no longer exists, the Merc wouldn't have opened. And he only got final confirmation of that 10 minutes before the opening.
Wow.
We were that close to having the whole damn system shut down. And as a result of this, we developed what's called the President's Working Group on Financial Markets, which is otherwise called the Plunge Protection Team, which is the Secretary of the Treasury, the head of the CFTC, head of the SEC, and the economic advisor from the president's staff. And these are the guys that are reputed to have basically stopped any decline in the market, working mostly through Goldman Sachs and using futures because of the leverage to lever up the whole market because of the spread trade between cash and futures. Anyway, that's kind of a thumbnail of a 2-day period there.
Well, does the plunge protection team still exist, Byron?
They certainly do. And a lot of guys who are in New York especially think that they're very active. That aside from the high-frequency traders and the public who thinks that the Fed always has their back, there's a policy in Washington that believes if the market goes up, there will be a perception among the American people that the economy is doing extremely well, whether it is or not. And so there's a lot of bright people that are pretty connected who think this has been part of the leveraging up of this market, not so much lately, but over the last 3 years.
Mm-hmm. Do you remember that when we were on the floor, they used to have that M1 money supply come out at 115 when we were still trading the S&P, if you'll remember? And we would flash, whatever that M1, M2 was. Now they don't even think about those numbers anymore because they're so high, no one would believe them. And to me,
Sorry? Yeah.
No, go ahead, finish up because you know more about that than I do.
Oh no, yeah. What was it? Fun then, actually. This was before 82. The number came out in Chicago time 310, and the market closed at 315. So one of us, usually I think it was either you or Bob Schmid, would stand over by the ticker, the machine, the Reuters machine, and you'd flash it to me in the pit, and we would basically scalp the number ahead of the public or other guys in the pit who didn't have that information because they had to make phone calls. We made a few bucks that way.
Yeah, that was
paid 320.
Yeah, they figured it out pretty quick. That's for sure. Anyway, so you'll see when you worked at Goldman Sachs, you worked with John Corzine at one time, didn't you?
Right, I sat on the desk with him during my training period before they sent me to Chicago. John was a huge trader, a very successful trader, and a very nice man. I lost track of him, of course, and then he made a lot of money, had a lot of power, and people do funny things in that world. But
wow,
one of the strategies, Byron,
hold on, we got to pay a few bills. Byron, we got to pay a few bills with a commercial. Could you stay with us till after the break?
Sure.
Okay, we'll be right back, folks. Byron Tucker.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with my good friend Byron Tucker, who worked for Leo Malamed on the exchange floor, ran Goldman Sachs' desk back there in the early 80s when I first met him. Byron, we have a question from one of our listeners here about your view of the quantitative easing that's been going on since 2009. Do you have an opinion on that?
It seemed to be beneficial in stabilizing the markets and up until perhaps 10 or 11, but I think after 11 it's been detrimental. It hasn't allowed a normalization of markets, and it certainly hasn't allowed the, what you call it, creative destruction, in the words of the economist Schumpeter, that allows failing companies to fail. Instead, it's kept everything alive, including zombie corporations. And ultimately, there is a mean reversion. There's a going back to the average, and it's going to be very painful because of how far this has pushed us away from what would be a normal economic cycle.
Okay, we have another question from one of our listeners. Do you think that the replacement of Janet Yellen will have any effect on what's going on in the world?
Not particularly. The Fed is, regardless of what they say, a political entity. And they tend to create a narrative about what has to be done that is not necessarily connected to the reality of what's going on in the economy. And the current narrative, which drives traders, is that rates have to go up. And even if we have subpar GDP growth, which it's very hard to know what's true there anyway, I think the Fed's going to go through a tightening cycle in anticipation of having some ammo for the next downturn.
Yeah. Byron, I have to ask you to share.
Get in the way. Sorry, Larry. Go ahead.
I would like. No, I just would like you to tell the folks a story of when we were trading in the Swiss franc pit. The Scott Slutsky was running the deck there for the Swiss franc pit. Tell them the story about the day where you had the big out trade. I think they would really enjoy it for the real reason of how much people have at risk on the floor. So, can you want to tell them? I'm sure you remember it.
I remember it well.
So, why don't you tell them what happened?
Actually, I'm in the Swiss franc pit trading, and I'm buying 15 Swiss, and Scott thinks he sold me 50, and the market had a dramatic move down. I got out of my 15, and I will show up the next morning with 35 long in a market that's dropped dramatically, and so I'm working on the out trade. Actually, no, it's the other way. The market went up. I got out, made a profit. The market's up. There's a huge profit in this account, Larry. I got it backwards. I had two big out trades. This was the one in the Swiss. The market was up, and I'm trying to settle the out trade. And one of my friends on the floor comes up to me and says, you better get over to the Swiss pit because someone's trying to take the profit in that trade and simply make you whole on the 50 versus 15. And so I go scooting over there. This is all around 7 in the morning, and show up, and they say, oh, yes. There is a profit here. Let's split it. There was nothing like trying to nab out trades that are profitable on that floor, Larry.
That's for sure. I remember because we were talking about it right after, and you continued sweating for 2 days, as I recall.
That was a lot of money. I mean, and
yeah, it was a lot of money. Absolutely. Yeah, we only paid $100,000 for our IMM seats, $107,000 back in '82, and now they went up to over $4 million, didn't they?
Well, the seat went up to almost a million, and then when they demutualized in the late 90s and created stock, at the peak of the stock run-up, they were worth $4.5 million.
Wow. And
a friend of mine who bought one at that time, just a little bit before, he paid $50,000 for his seat. He's getting $133,000 a year in dividends from the value of his seat.
That is truly amazing. One of the greatest investments of all time. Instead of trading, just buy a seat and hold on.
Larry, you and I have said this, that, we thought we were going to make money buying and selling the market. No, you just had to own real estate on the exchange floor. You just had to have seats. Yeah. And Jack Sandler, who was the former chairman, accumulated over the course of his career, it is rumored, 35 seats.
Wow. That's really meant. Now, some of these seats were sold on, the day after the crash. I mean, there was a lot of bankruptcies, weren't there, Byron, on the 20th?
Firm bankruptcies, individuals. I mean, it was, yes. There was a great deal of pain and suffering. There were some people that made a great fortune, too. I had personally a fistful of puts on that expired couple of weeks before the crash.
Yeah. Well, we were in those puts. They expired on the 16th of October, that Friday. The market was down 108. Then I went to, and by the way, I spoke to Eddie Horowitz, our old friend. He was married on the 18th of October that year, and he said to say hello to you for today. But he's still trading. He's in his 80s now up in Mercer Island, Washington, but he wanted to send his regards on to you. He remembered the days he would come down to Avila Beach when we'd have all those talks about the economy, and all the doctors would sit in with their mouths agape as you guys would talk about what's happening in the world, and they had no idea, some of the things that were going on. Another memory, Byron, was in 85. We were in Avila Beach in February, I believe, when they had the Plaza Accord. And this was a Deutschmark, and we had a heck of a move in the Deutschmark at that time. But boy, Byron, it's hard to believe it's been 36 years that we've known each other, and all the things we've been through. I mean, it's just where does the time go, my friend? I don't understand.
I think it goes faster as we age, Larry.
Amen. That's for sure.
But the Plaza Accord was to devalue the dollar, as you know.
Yes.
It also created an imbalance in the pound that let Soros make all that money, and it also basically so revalued the yen that it destroyed the Japanese economy. That was a terrible event. That took 5 years, but it was devastating.
Yeah, somebody always makes something on these events, whether it's Brexit or something else. Do you have any feeling on what's going on in Spain, Byron? One of our listeners is asking about Catalonia, if that's going to secede from Spain. Do you have any feeling on that?
The problem there is that, yes, they want to, but they're not going to stand as a single economy, I do not believe. I think what they want is real federalism, which is what Galicia wants on the west, and the Basque Country wants The problem is that Rajoy, the prime minister, is acting like Franco and sending in troops to arrest politicians. In 1943, after the Spanish Civil War, 1943, the current head of Catalonia tried to start a secession. Franco had him killed.
Wait, hold on, BT. We got to take a break now, my friend, to end up the show. But thanks for joining us. We'll have you on again soon. Thank you very much, Byron.
Bye-bye.
Byron Tucker, folks, of the CME, my long-term friend. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking with Byron Tucker from the CME. He worked with Leo Malamed for quite a few years and ran Goldman Sachs' operation. I am really trying to get Byron to write an autobiography about all of his stories because, believe me, he has some that would really be very informative to all of us. So we're going to have him on as a guest again, especially when we come into these times where the market gets extremely overbought or oversold or some economic things occurred, because he's well read and he also is in touch with a lot of things. He travels more than most airline pilots, and his wife happens to be one of the big women of Wall Street. Anyway, let's get back to the market. We posted the chart chart of the Dow E-mini here. That's been the running the show. You'll notice that we made that Gartley up there near that 2380 something, 2305 level. We've come down. The NASDAQ has smashed into new low ground, but we have not done that in the Dow. That's telling us again that we probably reached some intermorning support here. So just keep in mind that this is a Friday and an up week. There's not going to be a crash today, folks, in my opinion, but opinions are like armpits. Everybody has one, and it usually smells. So keep in mind that we may have made a top, we might have not. So we don't know. We'll have to wait to see what our friend Mr. Winsky is going to tell us the next time he comes on, and then we'll go from there to see what's going on. So keep in mind, it's a Friday and an up week, but boy, get ready. If we close really badly today, like Basil said in his show early this morning, that is not a good thing. So if you close really badly today, down 150 or more in the Dow, I certainly wouldn't want to be long, coming in to the weekend. So that's my 2 cents worth. So we'll see what happens with that. Anyway, if we'll take a little time out here and see what's going to happen with the rest of the market as it does its thing. So live every day in an attitude of gratitude, and may God bless.
Hi, folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.